Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 8th of April. So we saw some really big moves earlier in the week. Some of the key indices and majors were actually really moving away from some of their support and resistance zones, but everything seems to have steadied a little bit over the last couple of days. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. You can see, we've had a really big extension move break out of this area. Like, this has been consolidating for quite some time now. You know, we've been talking about this area, but once that broke through, it really did extend. But what it did do very quickly was actually retrace. And yeah, that's a very bearish sign for it, really. Although we had a very big move, the sellers kicked in and really pretty much wiped out 2/3 of what that candle actually achieved. And this is a daily chart, so it was a pretty significant move. And then, of course, we've been followed on by two pretty bearish candles. Now, price has broken back down underneath the resistance, as you can see, but it is still in that zone that did give it the support and that little mini channel there for quite some time. So also what we've got is a 20 moving average catching up fairly quickly too. So the 20 moving average is getting up there and about to give it a bit more support. So if it does hover in this area for the next day or the next couple of days worth of trading, the MA is going to catch up, and I think that will probably give it a little bit more support and potentially help push it up a little bit again. I'm not so sure on the weakness of it, because I think this has been caught out here. Like, even though it does look very bearish, I think it's got enough here to say that it's probably going to be held up by the support. You can see here, even just a little bit lower than this, we've got the another level of support right through this channel here. So even as a point of real support, even if it breaks through this area here and gets past the 20, it's going to find support again at the 74 area, and that's very strong support because that's a role reversal zone. So if you are going to scalp it, you've just got to be very mindful that if you are shorting it, be very mindful that the 20 moving average is right in your face here. It's only about 20 or 30 pips away. And if you're going to long it, obviously we've got resistance in front of us. But what we also have is an area that has been tested now that should be a little bit easier to get to. So that's the good thing about this particular trade. I think it can go both ways. I haven't really got a preference because I think both of them have their merit, but what you do want is a small change of trend on the smaller time frames, of course, to actually signify that. So you can see here the 1 hour sold off fairly aggressively, but if we do see a series of higher highs and higher lows now on the 1 hour and it starts to track up, I mean, you can definitely scalp it here. If we get a series of higher highs and higher lows, it gets past the 20 moving average, you can definitely scalp it up into this area here with not a lot of trouble in front of you. So that could be a viable trade with a relatively tight stop loss because you've only got the low to contend with. But of course, if it sells off the 20 moving average here on the daily and makes a new low, although we have got that 20 on the daily in front of us, it is a potential scalping opportunity. But I think this is probably the big reload zone down here. The 74.20 area is probably where you're going to get the most amount of support. So just keep an eye on this one. I think you can do it both ways. Just look for the smaller time frame changes of trend. All right, I'll go over to the US dollar CAD. This has been a favorite of mine for a long time, and it's starting to get back into my good books, no question. When this candle happened, this was going to be a very good trade. Okay, so it's really important to understand what this candle means, because realistically, we already know, we've seen all this. Like, we saw this over here, we saw it over here. This is a very strong support zone, so we know that, right? But, at one point throughout the day, this looked like the most ugly and horrible red bearish candle, and this is probably another really big important thing. Always wait for the confirmation close, especially on the dailies, because the dailies can change very quickly, especially because you got to remember it's going through totally different market opens. Like, when a daily candle runs the whole cycle, it's got the Asian sessions, it's got the US sessions, it's got the Europe and UK sessions. So it basically runs, everyone has a go at it. And you really want to see everybody's opinion of it before you actually make a decision based on price action on a daily, right? So when this one actually did this, once this candle closed above, or once this candle actually moved above this one and had a move above the previous level here, this was on. Now the 20 was probably the first take profit, really. I mean, the 20 moving average, that's a role reversal zone as well, but it did push past that, starting to kick back a little bit, but it did have a very strong move. But this is exactly what happened over here. You can see that we had that build up of buyer and seller support at a very key level, pretty much the same level, pretty much the same price action. And as you can see, even though this candle reversed, it actually did continue on. So just be very mindful. History tends to repeat itself in some of these big pairs. So let's have a look at it. We'll keep an eye on this one. I think, though, that it's got problems right in front of it here. There's no question about that. 26.20 is a very, very strong level. It's got a 200 moving average to contend with, and also a 50. The trade was down here. It has broken past the 20, but maybe, you know, if it starts to sell off, I'm not so keen on the short on this one now, to be honest. I'd probably steer clear of that one. That's not the preferred move here. I would be looking probably for long opportunity. So, you know, you really want to get a pullback. You can see the 1 hour behaved itself beautifully. Like you can see the down to the 20 moving average. We talk about it every week. That's because it works every single week. The 20 moving average is just a key component for whatever time frame you're looking at. So really, really good trading on the CAD. Hopefully you were able to catch that, but it is a little bit precarious now. Okay, so we haven't got a lot of room to move up to the top. And, you know, we're only about 30 pips away from very strong resistance. So maybe a bit of a pullback, and we'll see how this one goes, see if we can break that resistance down early next week. All right, US dollar yen. This one behaved itself as we would hope, found support at the level where we wanted it to find support. And of course, it's clicked on from there and done the right thing for us this week. That is, you know, look, we're sitting at 123. We'll call it 124. It's close enough. That is the current move. We know that we've got, you know, basically about 50 or 60 pips to reach the previous high. So look, it can do it, and it wouldn't need a lot of strength to do it, but it's sort of just meandering up there now. And the last couple of days have just been, you know, this session and the previous session have only just sort of been thereabouts. I would probably wait for this one to break. I wouldn't be preempting the break. But if we do get it and it pushes up higher, I think it opens up opportunities to go long on this, and no question about that. So I think it's a pretty good one to keep an eye on. If it fails here and starts to make lower lows again, I think you've got a pretty easy level to get to. The 121.50 area again is going to be your first target, and of course that's going to be a 20 moving average. You'll most certainly be there now by the time you get there. So onto the smaller time frames. You can see the 4 hour. It's not telling us a lot. It's just having a little bit of trouble breaking through. It pretty much tells the story. The first time it got up there, it did it fairly quickly. Now it's really starting to sort of grind its way up there. And it's still getting there. Like, it's not really showing signs of weakness yet. But any form of weakness, like a series of lower highs and lower lows on a 4 hour especially, would bode very, very poorly for the long opportunities on this one. Okay, so that's what you've got to keep an eye on. And the 1 hour, of course, well, the 1 hour just does its thing. But again, you can see that we've got a lot of meandering in this level. I wouldn't take a 1 hour break at this level, because it's just simply because it's such an important level. And, you know, the daily isn't really reflecting a great deal of momentum. So I'd just be very careful on the long, because there's not a lot of room there and it's getting there slowly. You know, when we trade, we want the market to move relatively quickly and have some momentum on your side. And although we are moving in the right direction, it's not moving there with a great deal of force, and it does have problems in front of it. So look for a potential change around, and if we get a series of lower highs and lower lows on a 4 hour time frame, we can start targeting the 125.50 again. But it's been pretty good trading. If you got this long off this area here, once we got that, that was pretty good. All right. Move over to the dollar index now. So this has been the star of the show, really. This has been the one that has really seen big, strong momentum all week. Okay, and we have, you know, we closed at a new high now. So it is, look, it's got the 100 in its sights. Yeah, you can see that it's not very far away from it now. It's and it's doing all the right things. I think what it's doing now is establishing a base above that 98.80 that I like, because either way, we've probably got a trading opportunity. If it keeps pushing up, yeah, we've obviously got the 100 in front of us. But even if it comes back down and touches the 20 moving average and hovers around that 98.90 area, 98.80, you know, we've got a base now. That resistance is now should act as support. So realistically, that's even a stronger platform to go from. So we really want to see that. And ideally, in my perfect world, it probably would come back. What I would like to see is a close above here today and get the week candle closed above this one here. So we go to the weekly. If we see that weekly candle close above there, that bodes very, very well for the strength of the dollar index, and more importantly, the weakness of the euro next week. So that's the ideal trade. But if it did come back and then push up there again early next week, that would be okay as well, as long as it doesn't break this level. What's very, very important now is that this doesn't get down below 98.80. So even if it comes back down and shows a little bit of weakness, as long as it stops around this level here and reverses, we're still on this trade and still looking for dollar strength into the next couple of weeks. Okay, so very, very important that this level holds up. If we see any sign of a weakness at this level here in today's trading, it's an opportunity to get down back to the 98.80 area, and that would be a target. I wouldn't be going for any more than that. Of course, the euro is the trade we're talking about here. And as you can see, although the dollar index has made its high, or a new high. The euro still hasn't made that low, so there is still a little bit of movement there. I mean, the absolute low on the euro was almost at 108. Well, absolute, yeah, in recent times, of course. And you know, you can see we're still about 70 pips away from that. So if the dollar strength increases, this is the target. And it's only a scalp. You're absolutely scalping the euro. It's basically down to the level that it was that it previously reached. It sold off pretty nicely. But it's starting to show signs that it's fighting now. You can see the wicks on the last two candles. Both of them are fighting candles. So we're not getting the same big range moves that we saw in the previous 4 days leading into this. So it's starting to fight, and it's fighting because it's a very important level. So you just got to treat that with, you don't want to guess it. You want to be treating it with, acting on certainty only. So the best way to do it is to scalp. Keep your trades really, really short on this one, and until it gives us direction. If it does break that 108, and that may well do it, if the dollar index pushes up and closes above that high and starts strengthening early in the week, this is going to break this 108. A huge chance of that. And then if it falls, the fall from here is several hundred pips. So we don't have to be greedy. All we need to do is wait for it to actually do it. We need a daily close below the 108, and then the short is on. You can bet your bottom dollar. The dollar index will be above 100 at that point, and we will be off. If this turns around and starts to show a little bit of strength intraday, which it may well do, which is probably the trade that you would be looking for. So you can see on the 1 hour, it's just been trading perfection on the 1 hour. 20 moving average touch, sell, sell, sell. Okay, we see a reversal of this, and we see a series of higher highs and higher lows on a 1 hour. The target is relatively easy. We'll be going back to the mid 109, well, pretty much about 110 really. The 109.50 is not really, that's that area there. But you'd probably be, by the time you got in, you wouldn't be having a lot of room. So this is the area you're going for. You're basically going for the 20 moving average, which is around the 110. That would be a reasonable pullback. And that could happen easily in today's trading session. So that's what I'd be looking out for. Small scalps and a change of trend reversal to push up there. But I think sentiment is still very weak on this one. So just be mindful, you are probably counter trending. It is literally a scalp. Okay, the S&P 500, of course, is the last one we're going to have a look at today. I've drawn this fib up because there was a bit of selling pressure earlier in the week, and I saw a lot of comments saying, well, people thought this was the big sell-off. Look, I do probably expect that the S&P is probably going to come down at some time in the next few weeks, and we're going to probably see a bit of a pullback. But I'm hoping it's going to do that later in May, or later in the month, early May. That will signal a better fundamental, I guess, idea as to why it would do that, because it generally does that from a seasonality standpoint. Okay, so putting all fundamentals aside, seasonality is important, and when technicals play the game with seasonality, I think it's a really, really positive and good way to trade. So look, it came down. Panic shouldn't be setting in. This was a very, very big move. You can see the fibs already drawn there. That's a 38.2 pullback. I mean, that's one of that's the second least aggressive pullbacks you can get. The 23.6 is the most aggressive, and very rarely do we even take that. So the 38.2 is actually the perfect pullback, coupled with the fact that it's on the 50 and it's on the 20 moving average. So, and it's on a roll reversal area. It's got a lot catching it here. Okay, and look, really, can it break down that level and keep going? Well, I mean, of course it can, but the history would tell you that it probably won't. And in a perfect world, it will probably find a little bit of support around here and sort of push up a bit. I don't really probably expect it to go to new highs just yet. I'm not so sure it's going to go to the new highs anytime soon. But at the same time, when you're looking at these candles here, this was just launching to the moon. So realistically, all this is a 38.2 pullback of a very, very aggressive move. And if it does start to track up again and breaks past this the 200 moving average in particular, and this roll reversal resistance zone now, I would be looking and targeting for those previous highs in the very first instance. So basically back to the 46.20. So, not a bad swing trade. I don't think it's too bad at all. In order for it to go short, it's going to have to close down below the moving averages. If it does that, and that's a possibility as well, the 50 moving average can still catch it. The 50 Fibonacci level can still catch it, because that's a roll reversal zone as well, and a pretty strong level of support. And that would be the next target. If price action actually closes below these moving averages, I would be targeting the 4,400, 43.90 area. That's the next very serious level of support. If that level breaks, we're in for a bit of trouble. We don't really want that level breaking too early in April. If that happens late April, early May, happy days. So what we're doing is we're targeting a move up, potentially first having to break this level here. First, if we break past this 200 moving average, we'll start targeting the 46.20 again. And if it breaks down and closes below the two candles here at around that 44.40, we start aiming for the 4400. So only scalping on this one at the moment until we get a very clear direction. We probably really want it to hover in this zone for the next couple of weeks, so that will make technical sense, and then we start seeing some really big moves, hopefully around the late April, early May area when earnings season starts. So I hope everyone's had a great week's trading. I think we've had some really good opportunities. Hopefully you're able to catch some of the things that we talked about last week. Have a great weekend. I look forward to seeing you all next week.